We have a Discord that has somewhere over between 1,000 and 1,500 people who participate in it. And it's a means, it's a community, it's what we call our tribe of like-minded people who are trying to make money in the stock market. And Roger and Robert are two what I call bottom feeders who quite often give me come to my office on the Discord and say, hey, you ought to look at this stock. You ought to look at that. And for the most part, they aren't stocks that I'm interested in because they aren't making money. And I've lost enough money in the genome sequencing and genome editing fiasco of a couple of years ago. And so I want companies who are making change while they're making profit. But anyway, he gives me a company, and it's the ticker symbol NBIS, and it's Nebis, Nebius Group. And so the first thing I always do is go look at their financial statements. I take a look at their revenue. And I looked at Nebis, and back in 2020, it was doing $2.9 billion, then 4.7, then 7.0, and then 8.9. And then it had a little drop. It went down to $8.65 billion. And then in the middle of the year, the revenues dropped to 138 million, a 98% drop in revenues. And I must admit, I'm intrigued. I'm wondering, why is he sending me this? This is a company that ran into a brick wall and is crashing. And so as I dig into it, and what I do is when I'm curious, I go to Seeking Alpha, and I take copies of each of their articles, and I go to the website and take copies of their press releases, and I feed them into Google Notebook LM, and it produces me a 4-page document of a summary of what actually happened. And what I learned was this was a Russian company, and it was Yandex, Yandex, and it is labeled as the Russian Google. And its founder and CEO is Arkady Volozh, Volozh. And Arkady, Arkady, back in negotiates to take the AI elements, the data center elements. If you think of Google, if it's the Russian Google, it's got the search engine, it's got the cloud, and it's gathering all this data, and it's holding the data, and it's managing the data, and using it for their benefit in their advertising program. Well, it seems from what I read that Yarke says, I want out. The data centers are in the Netherlands, and we're building a new one in Paris, and I want that element of the business, and Russian, whomever, you can have the rest. And so what he's basically doing is creating data centers as a service. You've heard the words software as a service. So he's taking the ability and the equipment, and he goes out and he creates a relationship with NVIDIA, and he gains access to their GPUs and their latest GPUs, and he starts building out these data centers and saying, I'm going to do what Amazon and Google and Microsoft are doing in the United States by providing data centers as a service. With their Azure and their AWS, I'm going to do that in Europe, and then I'm going to expand into the United States as well. And so as a result, he took this $138 million, and in 2025, he's anticipating he's going to increase that revenue by 400%, and then by 2026, he's going to get it up over 17 billion, and therefore he's going to have a growth in revenue in 2026 of 2,417%. And now I'm understanding why maybe Roger is saying, Kerry, you need to take a look at this. So what I do, and let me take you and show you this chart I'm referring to here, because I think what it's telling me is that this is a stock that has a price of $18.95, was in 2024. It has one analyst following it, and today its price went up from 18.95 to 38.08. So it's had a very nice increase in price. But if you take the projections that what's his name, Arcady, is saying, this price I project on January of 2028 is going to go up to somewhere in the neighborhood of $146.25. So now I understand why Roger wants me to take a look at this. Let me take you through the steps I went through and show you this spreadsheet I'm talking about so that you can understand and then you can make a decision. Because there's one thing I want you to recognize. This is a guy who was working for a Russian Google, and now he's saying, okay, I'm not going to be affiliated with them anymore, but is he? Okay, that's the risk I see here. I see a smart guy who recognizes an opportunity, but he says the opportunity's not in Russia. The opportunity is in the rest of the world, and if I can take my talents and my skills and the people that I've put together, because his workforce just drops dramatically. I'll get you those numbers as well. So that being said, let's take a look. Okay, this is the spreadsheet I was referring to, and as you see, this is the Yandex, Russians Google's earnings in 2020, 2021, 2022, 23, 24. And as you can see, it went from about $3 billion to $8 billion and then crashed. Went to 138 million, the 98% drop. And I suspect it might have had something to do with, you see, their earnings were, as the Russian Google, were climbing and then took a tremendous dive here in 2023. And so something happened that said, we need to divest, we need to move in a different direction. Maybe it had something to do with the Ukraine war. I really don't know, and I really don't care, because I can't figure that out. But then, as I said, you have this tremendous drop, and then in 2025, he's showing that he's going to take the revenues from 138 million to 691 to 17 billion to 27 billion to 33 billion. So then what I say is, okay, here was the price in 24, here's where it is today, and if its price, and what I look at is say, it's not going to grow in accordance with the growth in revenue, but what it might do is if I multiply that earnings times 25, that gives me, and 25 is the PE ratio of the S&P 500 over the last 20 years. If I do that, and if my calculations are right, in 2026, their earnings are going to be $3.02. That means the price multiplied by 25, a PE ratio of 20, will be $75. And if we go forward to 2028 at 585, the price will be 146, and that's up from where it is today at 38.08. So that's the logic that I follow. What I also want to show you is how this all came to focus for me. Okay, this is the first place I go when Roger sends me the ticker symbol, and I see a stock that just for the last year is sitting at $18.94, and then this is when the divestiture occurs, and we see it go from here about 1763 to as high as 39.52, and what is it today? 38.37, down 2.9%. So that's the first thing I look at. The next thing I always go to is their earnings, and I go to their earnings estimates. Their earnings estimates don't give me a lot of information because there isn't a lot of information available. So then what I do is now I go to earnings revisions. And this is an interesting chart. This is their revenue revisions. Now, here you see a company that is, this is the Russian company that's going along and has some tremendous projections in price. And as you can see in this chart, what it's showing me is what are the projections for the years in the future based on their current earnings. And again, their earnings drop like a rock in 2024. So you see then that translated to this is what their earnings are projected to be in 2025. And that's what's appearing here. Okay? Now, again, there aren't a lot of analysts following this, but this is what the company is projecting their revenues are going to be. I think I said earnings up there. These are revenues, not earnings. There are no projections. I have to translate the projections through my mathematics. And you can see this is a company that is projecting some tremendous growth. As I say, it comes out to 2030, and we've gone from in 6 years from 138 million to 42.3 billion. That's some tremendous growth. And look at it and say, yeah, but this is all based on one analyst. That's right. And that's to our advantage. If we believe this, if we dig into it and understand it, then it can pay us some dividends. So let's go over here. So what I've done is I've brought this over onto my tell sheet. So this is on the bottom of my tell sheet, and you're going to see that I'm projecting their earnings are going to grow over the next 3 years, earnings per share, at a rate of 127%. Their current PE ratio is relatively low of 37. That gives it a PEG ratio of 0.29. Now, a PEG ratio that low basically says that the stock is way underpriced. So I take that PEG ratio and convert it to 1, and that says the current price of 37 is underpriced. The fair price at a PEG ratio of 1 would be $89.81 today. Then what I say is, okay, if it grows at the same rate, if the price grows at the same rate that I believe the earnings per share are going to grow in 2027, that would mean over the next 3 years, every year the price grew by 127%. That would make the price in the end of 2027, $1,507. Do I think that's real? No, I do not. I don't think the price is going, because again, this is going to require a lot of build out. So as his revenue goes up, his cost of doing business is going to go up as well. So then what I say is, okay, this is the one analyst says that the price today of 37 is going to go up to 51 in the next year. Okay, that's a 35% gain. And this is my calculation that if in fact in the start of 2028 their earnings are as they are projected to be, $5.23, multiply that times 25, which is the historic PE ratio of the S&P 500, and you've got a stock that is probably going to sell for $130.75. So that's how I go about it. And then down here, I give it a growth rate, 5-year growth rate of 30.7%, and then I project the price based upon that all the way out to 2045. And again, this is my craziness that basically, and I don't think that's fair. I think to probably guesstimate a price on a stock any more than 10 years in the future is just in the wind, but I do it anyway. So I see this as a stock that has some tremendous growth potential. Oh, and one other thing I wanted to share with you. That 4-page document that I went into, I created a deep dive, and this is a podcast interpretation of that 4-page document. It is a back and forth of these are the numbers. It is the summation of all the articles that I was able to find as of this morning or yesterday on 1/22/25. And if you'll come to our website and sign up for the gold platform, you'll have access to this. As I say, it's down below. It's not in my list of stocks that I own and am tracking because I'm not convinced yet, okay? In fact, I'm putting this out because I want you to look into it, and then I want your feedback. I want Roger and I want Roberts, and I want you to come to our stock talk this Friday and next Friday and the next Friday, because I'm going to give you 14 days of free access to everything we've got. And you make a decision, can you make money working within the Best of Us Investors group, you contributing, you learning, you coming to understand, and you make good investment decisions. That's what it's all about. And I think one of the best tools I give you is this deep dive on every one of the stocks that I track. And I update that deep dive every time they have an earnings statement or something comes out that catches my eye and says, I need to look into that further and share it with my subscribers so that we can all make better investment decisions. So free entry, go to in the description, the link, click on it, and go in and say, yeah, I want a free look for 14 days and see if this is what I want to do. And as I say, I do this kind of analysis on about 60 stocks. Here you see them. Everything from Apple to Vertiv. And of course, you have your NVIDIAs and your Metas and everything. And here, I'll be right up front for you. There's my number one stock. This is Iren Energy. Iren Energy is very similar to the Nebis Group. Iren is in Texas. Nebis is in the Netherlands and building out in Paris and has some ambitions to come to the United States as well. So take a look at it. Let me know whether you think we've got a winner here or it's where it belongs on the bottom. Talk to you again in the future.